Jeff Sica joins me now. You think that we're going further south on this market, don't you?
I do, Stuart. Last night at around 12:05, if you follow astrology, Mercury is in retrograde, which the astrologists say it's a time of chaos. I don't believe that. I just think it's interesting. Yeah, but no, that's not the real reason.
Well, you got us all smiling anyway. Go ahead.
That's not the real reason. The real reason, Stuart, is I know everybody's talking about the typical valuations, interest rates, as Brian said, concerns about the Fed. But what I see is a much deeper problem. And that deeper problem came out of Japan in trading yesterday, where they halted both the stock and bond market. What I see is there's a problem in the credit market, because what Brian was saying about the Fed cutting interest rates, have they raised interest rates too much? What we're seeing in the worldwide credit market is we are seeing counterparty risk. And what that means is we could start to see an avalanche of credit defaults, of problems with the banks. Now, what does that mean for the U.S. market? What it means is that, yes, you're going to get these quick fix rallies. You're going to get these anticipations of interest rates being cut. But what we have in the banking system is a massive amount of debt. We have $1.5 trillion that needs to be refinanced in commercial loans, which is what I do. I'm in the real estate industry. There's a lot of vulnerability out there, and what I've been saying on the show all along is that the market obviously was too focused on a few stocks. I said on the show last week that earnings would be lackluster, but what I believe is going to happen is we are going to see a credit crisis that we haven't seen in a very long time, and it's problematic.
Okay, outside of the credit problem, which you're right to raise on this show, what about the recession? Are we headed to recession?
I believe we are, and Stuart, it's been the consumer. The consumer drives 70% of the market, and the consumer has been pushed to the brink, and we're starting to see that. Now, there's been this false belief that the strength of the employment market, that it had to do with the amount of employees that are being hired. What is in reality is that 1.2 million Americans, U.S. citizens, lost their jobs, which were replaced by 1.3 million foreign-born or illegal immigrants. That is U.S. labor statistics. That shows that the labor market was never as strong as it was, and a lot of the new jobs being created by part-time workers, it's never been as strong as it was. Now you're going to see layoffs, and there's going to be more carnage in the future, leading us to a deeper recession.
Okay, when it comes to the market, how do investors protect themselves? What should an investor do today?
Well, they shouldn't look at astrological charts.
No.
But what they should do, they shouldn't also panic. What they should do is look at where they're over-allocated. Too many of us have too much money in those big seven. Reduce those. Just cut them. But don't sell them. Don't sell them entirely, but reduce.
How do you reduce your stake if you don't sell?
Well, you sell, but don't sell out completely. So you reduce the amount of shares you have and raise cash, because cash is king. The good thing about sell-offs, I like buying real estate. I think real estate's a good investment. I like gold. The good thing about sell-offs is it creates opportunities that we haven't had in a very long time. So cash is king. Raise cash and wait. But you don't have to sell everything. You're going to have these relief rallies. But people who are coming in and saying there's going to be bargain hunting coming out now, I think it's far too soon for that.
Okay, all right. Got a real debate going on here. Jeff Sica, thanks for joining us. I appreciate it.